We're closer to the end of a bull market than the beginning, and I don't think there's a lot of earnings power left in the tank. I think there's been a lot of capital allocation to buybacks and dividends, so we're not going to see anything organic, and most of what's going to drive markets is going to be really macro issues like trade deals, but it's going to be a lot harder to pick stocks. I don't think we're going to be going straight up and straight down as much as we have in the past.
Since you mentioned buybacks, I mean, there's a lot out there today, but there's some chatter that Senator Marco Rubio started tweeting about his bill that's forthcoming that would tax buybacks the same as dividends. Do you think that's having a market impact?
You know, I don't know. I don't know if it's hard to tell, to separate the bluster from what's actually going to happen. You know, we'd be going back in time because before we used to tax buybacks like dividends. We got away from that. So I don't really know what good that does us.
Jack, what's your view in terms of the overall market outlook at the moment? How would you frame it?
I think the market's giving us a bit of a warning signal to the upside here, Wilf. Look, I want you to think about it this way. Let's take a giant step back. We're talking about an environment where corporate balance sheets are strong. Employment is strong. Earnings didn't really fall off the edge of a cliff like people were expecting. And a lot of that was because of what's happening in China. Over the course of these last couple of sessions, we've seen what I call détente with trade tensions. And if that continues, or better yet, if we were to get some kind of a Kudlow-Mnuchin solution, watch out. There is a lot of cash that is sitting there in the fixed income market right now, and that natural rotation is going to take it up. And I completely disagree about earnings. Look, we saw an entire year of repatriation of capital. It's going to take years for that capital to work its way through. Look for CapEx to start picking up. If we get this big headwind of China out of the way, or at least increase the détente, all right, then watch out. We could see new all-time highs by the end of the quarter, coupled with a move and a velocity of the move in the 30-year and the 10-year, a 10-year that's probably going to take us to 3%. But it's going to be that type of move that leaves people breathless because they will be underinvested and out of the market because of these signals that they're getting out of the China trade problem.